Hi, and welcome to this special edition of Barrier Life. In this country where ignorance of the law is no excuse, you could be in dire straits if you have offshore accounts that you have not reported to the IRS. The penalties are horrendous.
If you don't come in during the voluntary disclosure period and they find out about your account and they basically bring you in, arresting you, so to speak, the penalties will be $2.3 million compared to $382,000, and they'll pursue jail time.
You may be considered to have an offshore account and not even know it.
My mother-in-law has an account in Hong Kong. Yes, I write checks out of it every year to give gifts, as she wants me to all my children. It's not my account. She gives me permission. That's all reportable transaction if the account has more than $10,000 in it.
International tax expert and CPA Ron Cohen is with us tonight. Hi, Ron. I understand there is some news for U.S. taxpayers with unreported offshore income.
Oh, yes. The I.R.S. is pursuing people with accounts offshore where their income hasn't been reported in their U.S. tax return. Now, it's always been the case that they should have been reporting that income. Let me first say that me and my firm always encourage everyone to report income each year when it's earned as required by the IRS rules. But a number of things have happened, and if you don't take action soon, you can get into trouble.
What kind of trouble can they get into?
Well, they've talked to their friends or relatives who have said, oh, you don't need to report that income. And that's not the case. They either intentionally or by just ignoring it don't put that income in their return, and those days are quickly coming to an end, especially now with President Obama, who's pursuing offshore income as easy additional tax revenue to collect for the government.
Why would someone want to keep these accounts secret?
Oh, well, offshore in various countries, you can have an account where that the income earned on the account's not reported to the IRS, unlike a U.S. bank or financial institution where a Form 1099 is provided every year to the IRS, so the taxpayer's return basically has to match up with that reporting from the bank. Well, a Swiss bank's not required to do that. A UK bank's not required to report to the IRS. So the secret is the income isn't in the information about the income's not in the hands of the IRS.
You mentioned President Obama wants tax money. How does this affect people that have offshore accounts?
So if you have, for example, a Swiss bank account and the interest income on that account's not been reported in your U.S. tax return, well, the first thing that happened was that the Internal Revenue Service and Department of Treasury have subpoenaed the Swiss bank account to provide the names and account numbers of all the account holders. The Swiss government has actually countersued back, saying that violates a treaty we have with Switzerland, and we'll see what happens with that. But in the meantime, what's happened, and one of the reasons I really wanted to come here and talk about this tonight, is that the IRS has set up a voluntary disclosure program. So while the courts figure out whether the Swiss bank account will have to give out the information or not, the IRS says if you have not reported your offshore income, you need to come in and report to the government all your offshore income that was not reported in your return for the last 6 years. If you do that, they will charge you tax, interest, and penalty and settle the case only for the last 6 years. In essence, they'll somewhat ignore the time before that. But if you don't come in, and either by the Swiss bank giving your name to the IRS or from some other investigation, they get the information about you and your unreported income, they will charge you almost 7 times more in penalties on the account. Plus, they promise that they'll pursue a criminal prosecution, and in that case, perhaps try to go into court, get you arrested, and take you to jail. So there's an opportunity for a short period of time now for a taxpayer to get right with the government if they think they're in this situation. They have to come in for what's called a voluntary disclosure, file all the unfiled returns for the past 6 years, and work out a settlement based on parameters the IRS has set up. If you don't do that, the consequences of getting caught are tremendously worse than they were before.
Can you give an example in numbers of what the consequences could be?
Right. So take a taxpayer that had $1 million in, let's say, a Swiss bank account. And over 6 years, doing the math quickly, they earned $50,000 a year for a total of $300,000. Okay, so if you go in for this is from the I.R.S. Publication. They came out with some frequently asked questions to give guidance to taxpayers what would happen. So if you had $300,000 of unreported income, and you follow the procedure to come in for voluntary disclosure, they in their frequently asked questions say that the tax and penalties will be about $380,000 to the taxpayer. Now, one would say, well, wait a minute, I only earned $300,000. Why would I pay $300,000 in tax and penalty plus additional interest? And the answer is because if you don't, the second thing happens if they catch you. The second thing is if you don't come in during the voluntary disclosure period and they find out about your account and they basically bring you in, arresting you, in so to speak, the penalties will be $2.3 million compared to $382,000, and they'll pursue jail time. So that's why for people who have, and it's very common, someone, again, has been told by their relatives or friend, you never have to report that income. 10, 15 years have gone by since they came to this country and became a U.S. taxpayer for all the other purposes. And then if that, and let's say it's a Swiss bank account, and the subpoena gets, the subpoena is respected, and the Swiss bank has to give up all that information, then after September 23rd, 2009, somebody is facing almost 7 times more in penalties and possible jail prosecution. So it's a very, very serious time for someone with offshore reported income. Let me go on to say it's not just Switzerland. It could be India or China or any country. The definition is a foreign bank account, which is basically any bank account where it's not in the U.S., because U.S. banks report this information again to the I.R.S. every year, so there's nothing secret about it. The I.R.S. can catch those people if they don't put that information on the return, but when it's from a foreign account where there is no 1099 filing, that's the hole they're trying to fill. And this time, because of the great deficits that are being run up by the TARP legislation and just having a new administration that has a different point of view, they're really serious. It was always illegal. Let me get that straight to you. It was always illegal not to report this income, but now the consequences are becoming much more clear, focused, and the Obama administration has mentioned they're going to hire 100,000 more I.R.S. agents. And so this is the time to act, or at least to seek good legal counsel on what your options are if by no fault of your own, you just didn't understand the law, didn't understand the forms that had to be filed, and haven't been reporting the right amounts. Now's the time to figure out where you stand, because after September 23rd, 2009, the consequences are much more dire.